The war in Ukraine is a human tragedy. It is also a pivotal moment in geopolitics and global economics. Understanding the investment landscape requires acknowledging this complex backdrop. The conflict has introduced unprecedented levels of uncertainty, making traditional investment strategies unreliable. The invasion has sent shockwaves through global markets. Volatility has become the norm. Investors are grappling with inflation, supply chain disruptions, and the spectre of recession. Yet amidst this turmoil lie opportunities. The defense sector is experiencing a resurgence. Energy markets are being redrawn, and the need to rebuild Ukraine will create long-term investment potential. Navigating this landscape demands a nuanced approach. Traditional risk assessments are insufficient. Investors must consider geopolitical factors, market volatility, and the long-term implications of the conflict. This is not a time for speculation. It is a time for prudence, due diligence, and a long-term perspective. Geopolitics has returned to center stage. The war in Ukraine is a stark reminder that political events can have a profound impact on markets. The interconnectedness of the global economy means that shocks in one region can reverberate across the world. This is particularly true for commodities like energy and wheat, where Russia and Ukraine play outsized roles. The invasion triggered a spike in energy prices, exacerbating inflationary pressures. Supply chains, already strained by the pandemic, have been further disrupted. The uncertainty has led to increased market volatility. Investors are left grappling with unpredictable swings. Traditional safe havens like gold have lost some of their luster. In this environment, diversification is key. Investors should avoid overexposure to any one sector or region. A balanced portfolio with a mix of stocks, bonds, and alternative assets can help mitigate risk. It's also crucial to stay informed. Geopolitical events can unfold rapidly, and investors need to be prepared to adjust their strategies accordingly. While many sectors have suffered, the defense industry is experiencing a boom. The war in Ukraine has shattered the illusion of peace in Europe. NATO countries, once complacent, are now scrambling to rearm. Germany, long a proponent of pacifism, has pledged to increase its defense spending significantly. This surge in demand is translating into a windfall for defense contractors. Companies like Lockheed Martin, Raytheon Technologies, and Northrop Grumman are seeing a surge in orders for weapon systems, ammunition, and other military equipment. This trend is likely to continue as the war drags on and tensions with Russia persist. However, investing in the defense sector is not without its ethical considerations. Profits in this industry are directly tied to conflict and violence. Investors need to decide whether they are comfortable supporting companies that benefit from war. Furthermore, the long-term sustainability of this boom is uncertain. Defense spending is often cyclical, and a resolution to the conflict in Ukraine could lead to a decline in demand. The war in Ukraine has upended global energy markets. Russia, a major energy exporter, has used its leverage to pressure Europe. The weaponization of energy has exposed the continent's reliance on Russian gas. This has led to a scramble for alternative sources of energy, creating both challenges and opportunities. In the short term, energy prices are likely to remain elevated. Europe is rushing to secure liquefied natural gas, or LNG, from other suppliers, driving up global prices. This benefits LNG exporters like the United States and Qatar. Renewable energy companies are also well positioned to capitalize on the shift away from fossil fuels. However, the transition to a new energy order will not be smooth. There will be winners and losers. Oil and gas companies, particularly those with exposure to Russia, face significant challenges. European utilities dependent on Russian gas are also vulnerable. The long-term winners will be those who can adapt to the changing energy landscape. Section 5. Rebuilding Ukraine, a long-term investment horizon. Beyond the immediate impacts, the war in Ukraine presents a unique long-term investment opportunity: reconstruction. The scale of destruction is staggering, with entire cities reduced to rubble. Rebuilding Ukraine's infrastructure, economy and society will require massive investment. The World Bank estimates that the cost of reconstruction could reach hundreds of billions of dollars. This presents opportunities for companies involved in construction, engineering, materials and technology. However, realizing this potential requires a stable and secure Ukraine. Investment will flow only when there is confidence in the country's future. This means a resolution to the conflict, a commitment to the rule of law, and a transparent and accountable government. While the path ahead is uncertain, the potential rewards for those who invest in Ukraine's future are significant. Section 6. Stock picks for a turbulent world. Given this backdrop, what are some specific investment recommendations? Remember, these are not financial advice, but rather starting points for further research. In the defense sector, Lockheed Martin, with its diverse portfolio of military aircraft, missiles and defense systems, is well positioned to benefit from increased global military spending. In the energy sector, NextEra Energy, a leading provider of renewable energy, offers exposure to the transition away from fossil fuels. For reconstruction, Caterpillar, a manufacturer of construction and mining equipment, stands to gain from the rebuilding efforts in Ukraine. It's crucial to reiterate that these are just examples. Thorough research is essential before making any investment decisions. Consider factors like company financials, management teams, competitive landscapes, and regulatory environments. Section 7. The need for prudence, balancing risk and reward. Investing in a time of war is inherently risky. The situation in Ukraine is fluid, and the potential for unforeseen events is high. Investors must balance the potential rewards with the significant risks involved. This is not a time for speculation or chasing quick profits. Due diligence is paramount. Thoroughly research any potential investments, considering both the company's fundamentals and the broader geopolitical context. Diversification is also crucial. Don't put all your eggs in one basket, especially in volatile sectors like defense and energy. Remember, investing is a marathon, not a sprint. Focus on the long term and be prepared to weather short-term volatility. Stay informed about geopolitical developments and their potential impact on your investments. And most importantly, only invest what you can afford to lose. Section 8. Conclusion: investing with eyes wide open. The war in Ukraine presents a complex and challenging investment landscape. Volatility, uncertainty, and geopolitical risks are the new norm. Traditional investment strategies may no longer suffice. Yet, amidst the turmoil lie opportunities in sectors like defense, energy, and reconstruction. Navigating this landscape requires a nuanced approach. Prudence, due diligence, and a long-term perspective are essential. Investors must balance the potential rewards with the significant risks involved. By staying informed, diversifying portfolios, and focusing on the fundamentals, investors can position themselves to navigate the challenges and capitalize on the opportunities presented by this turbulent era.